So today we're going to talk about one of the first step of recording the business transaction is a journal. So by journal I mean is the initial entries of journal is done in phase 1. So they have 3 phases to do the journal entries: phase 1, 2 and 3. So we're talking about 1.1. okay? So by the end of this video you will be learning everything you have to do before journalizing. So I have divided the study outline here. For the first 10 minutes I'll talk about the basic but important things about the journal entries and related topics, and on the next phase I'll do the 10 to 20 minutes. I will solve the questions, actual questions. There are 11 questions, and 20-25 minutes I will talk about normal balance, debit and credit, which one is favorable, and why debit is debit. In fact, some of these are the answers you can find within the before 20 minutes. Okay, so here let's start the part A lecture. The first one is recording process. So we start here by a story, so it's better for you to understand. Okay, so it's a hypothetical case. Here Bill Gates started a company called Microsoft in the year 2021, and we are an accountant of the company called Microsoft. So we do the journal based on the source of documents. Here the source of documents includes all kinds of invoices, whether it's like sales invoice, purchase invoice, like freight invoice, like transportation invoice, every related invoice. Okay, so before starting into the journal itself, let's know the meaning of double entry. So what is double entry and why it's important? So double entry, so this guy called Luca Pacioli in 1494, he published a book about the accounting. So here he said that the debit must be equal to credit in short. So debit here is called debit and credit means credit. Okay, so after some times it is translated into English. Debit means debit and credit means credit. In the third edition 1633, the Ralph Hansen started to write debit as a DR and credit as a CR. So the questions arise here: why debit must always equals to credit? So let me give you an example. So you have $100, okay, and you went to the bookstore. So you bought $80 worth of book and come back home. So here what you have now is your $100 of worth is equals to $80 of book plus $20 of cash, which is still in your pocket. So the thing is that debit is an application of funds and the credit is a source of funds, so that's why they are always equal. Okay, so second question is why debit is DR and credit is CR. Many people believe that because the debit its Latin name is debre, so it is DR because there is a DR, DEBER here, so that's why. And the same case in the credit. Okay, so as we know that debit must be equal to credit, so debit must be equal to credit, like the same like the two sides of coins. So here debit means DEA, credit means LER, is a dealer. In short form you can memorize by saying dealer. D means dividend, E expense, A assets, L liabilities, equity or revenue. Here debit is actually not a debit balance. You know why? Because it's a contra capital account. So we have talk about the recording process, double entry, debit, credit, and for the analyzing the transactions we have two approaches. One is accounting equation, asset is equal to equity plus liabilities, which I will be doing in lecture 1, and the other one is the traditional approach. So we focus on this golden rule. Okay, so if you want to remember, you remember by this debit the receiver, credit the giver. What comes in debit, what goes out credit. All kinds of expenses and losses are in debit. All kinds of incomes and gains are in credit. So this is the format of journal. So if we do cash account to share capital, we are journalizing the transactions. Here cash and share capital are account titles, are accounts, and you can see that to record an investment by the owners, it's an explanation. Here REF, reference, means just like giving a name to someone. So here reference, you would say, for example, for cash, you might see here 101, 201, 301. It's just a name for the cash to locate into the ledger for the simplicity. Okay, so we have done the part A within a few minutes. So let's dive into the questions to get more about the journal. Okay, now let's do the problem solutions to get the better understanding. But before doing the actual journal, you have to know the two important things. The first one is the golden rule itself, and the second one is to know the story. Transactions tell the story. Here there are 11 transactions here, so they tell a story. So what is the story here? Bill Gates started a company called Microsoft in 2021 January. So there's are like 10-11 transactions, and we are an accountant of Microsoft, so we are doing the journalizing. Okay, so let's start. Before starting, you must understand Bill Gates and Microsoft are different. They are different person. Okay, it's a person or legal entity. They are different. Okay, keep in mind. So for the Microsoft, Bill Gates invested 10,000. So cash comes in, cash account debit to capital, worth of 10,000. Okay, on the second day, the company thinks we need some equipment, computer equipment. So they purchase it. So what's coming? Equipment. So we purchase in cash, so cash goes out, worth of $2,000. On the third day, the company still thinks we need some computer paper, stationery like pen, pencils, calculators, but it lasts for more than 24 months. Okay, so the supplies comes in, so we pay the cash, same thing, worth of $3,000. So is it as supplies is expenses or asset here? It's assets. Why is that? Because it lasts for more than 24 months. Okay. So on the fourth date, what happens is Apple comes, okay, we need some programming service, can you do some programming for us? And Bill Gates say, okay, we'll do, but it charges 4,000. Okay, and the Apple pay cash to the Microsoft. So cash comes in 4,000 by doing the service. So it's a service revenue worth of 4,000. On the fifth, Bill Gates think that okay, we are receiving some clients, so why not to do the advertising and attract a lot of people. And that's why Bill Gates went to Google on behalf of Microsoft and said, hello, we need advertising service, can you do us? And Google said, yes, we can do it, in fact we are advertising, we are for that. Bill Gates said, okay, then do the advertising for us, but I don't have cash now, we'll pay it later. Okay, and Google agreed. So for Microsoft, is advertising expenses. Okay, so we have expenses of 500. but we have not paid to the Google, but we have to pay in future. So it's a liability, so it's a account payable. 500. Okay, and on the 6th, after the advertising, Samsung comes, the competitors of Apple say, we need the same kind of programming service, and Bill Gates say, okay, we'll do it, no worries, but it costs 6,000. Bill Gates see the opportunity and increase the price. So one of our employee did the programming service, but the Samsung said, we don't have cash, we'll pay some cash now, and we'll pay the remaining amount maybe on next month. Okay, they agreed. Bill Gates on behalf of Microsoft agreed, and Samsung also agreed. So what happened is that our company received the cash $1 by doing the service of programming. It's 6,000, but we still need to receive some amount, which is 5,999. So it's a, we have to receive, it's a set, it's a RCI, it's a account receivable. Okay, on 7th, 8th, the Bill Gates thing, we have to pay some expenses, 3 expenses particularly. So the Microsoft pays salary, SALARIS, to Amy, and also paid the rent expenses, also utilities expenses. What are utilities expenses? Examples are telephone bill, water bill, things like that. 100, 200, 300. So for the company, all cash goes out worth of 600. Okay, and on the 8th day, Bill Gates think, okay, we have done the advertising and we haven't paid to Google, let's pay now. And Microsoft paid it. So cash goes out, we know this, right? The amount of cash goes out is a 500, we pay fully to the Google. So there is no relation now with the Google. So what happens here is account payable 500. This account payable comes here. Okay, so you might say account payable is a credit, right? It's a credit balance. Why we do it? There is, we have to know about normal and abnormal balance. Okay, so we just make it 0, we just make it, we cancel it. But in accounting we cannot cancel it, we cannot just erase this or delete this. Why is that? Because the accounting means the recording, they leave the trace, you know, the what is behind that, so we can trace it back. So we make it 0 by debit. If the things here the account payable is credit, we debit it, make it 0, that's it. So on the 9th, what happened is that Samsung pays a remaining amount in full. So we receive the cash, okay, of 9, no, it's a 9, not 9, it's a 599, and we receive, okay. So same thing, so we have to receive 5,999 from Samsung, we receive it, so we have to 0 it, account receivable, this worth of 9,000, we make it 0. It was in debit side, we credit it, make it 0. As I told you before, we cannot just do like this. And on the 10th day, January 10, what happens? Company pay dividend. Okay, pays dividend, paid to cash. Cash goes out worth of $10. So for extra tips, this dividend is a contra capital. Okay, and 11, biggest thing, we have to hire Melinda as a receptionist. They agreed, and in fact Melinda is hired. So do you have to record here? No entry here. Why is that? Because of monetary assumptions. Here, yes, we have done the agreement and actually hired it, but we haven't paid $11. Maybe we'll pay it later. Okay, so there is no monetary transaction, so we don't have to record it.